It's time for Kramer's Mad Dash as we count down to the bell.
One of the stocks that's most asked about in the lightning round, people love their pets, obviously, and the stock is Chewy. And Chewy did trough. I had Sumit Singh on, the CEO, when it was at 19. And he basically came on Mad Money and said, listen, we're done going down. What a great call. Now, Bear says active customers nearing a trough. They're still 3% below the pandemic peak. They think that's an opportunity. They're not saying they're saying still early in the sentiment. This used to be a darling. It was one of the most loved stocks, and I think it can make a comeback because I do believe that it's a way to be able to feed your animals. I like it. It's not our primary way now because we switched to Amazon, and a lot of people did switch to Amazon, but I do like this Baird piece from sentiment. The stock can go higher. It's a heavily shorted stock, 14% short.
You don't put it in the Peloton, Zoom, Teladoc universe.
It's a very good question. I do think that the fact that it can trough and then go up, and those didn't.
Okay, so I hate to agree with James Kramer. Anybody that watches this channel knows that I'm really not a fan of his. His underperformance, his market underperformance is very well documented. Nobody needs to take my word for it. He never beats the market. I've talked about why I think that is. I won't get into that at the moment, but I do think that there are some fair points that are being made here in relation to Chewy stock. And as we can see here, the share price itself has managed to make a fairly significant bounce off of prior support levels that we have mentioned in these technical analysis videos. So I'll be going over a few of those price levels here and looking at the overall outlook for the stock here going forward. So as we can see here, after this major spike high into 39.10, a lot of this was driven by sort of meme stock excitement. Another thing that people probably know if they watch the channel, I'm not a big fan of the meme stocks. If you're able to catch a run higher like that, that's perfectly fine. But overall, it's really not the way people should be investing. And another point was made in this Jim Cramer clip where they talk about Peloton and Zoom and all these pandemic stocks that did very well for a short period of time and then just sort of completely collapsed. Peloton is a really good example. Guess that's what happens when you're a woke nonsense company and you rely completely on pandemic circumstances that will never, probably not occur again. So anyway. But as he said, those stocks troughed and then never recovered. This stock has not behaved that way, and the real reason for that comes from the fact that pets are a huge part of the economy. I'm a pet owner myself. I've got a large group of dogs. We've definitely given Chewy a lot of business. I do sort of focus on Amazon a bit more because there does seem to be a bit more variety there. But I also think that there's not much of a market for pet-only products, and it might not seem like that's really the case. But name some retailers that specifically focus on pets alone. It's a little bit difficult to do that. I mean, you can talk about Walmart and all these other stores are going to have pet products, obviously, but there's not a huge number of well-known stocks or publicly traded companies that specifically focus on pets. So I do think that that's, a tailwind for the company going forward. And I do think that it should continue to support the stock. I do not think that this stock is a Peloton. So as we can see here, the share price did bounce off of the 1975 level that I have mentioned in prior videos. The real reason that I was watching this area comes from the fact that this was the 786 retracement of this dominant trending move higher, this massive spike high that we saw coming into 39.10. That was a little bit of an unsustainable move. Again, I think that was largely meme stock driven. It's not really how you want to be trading these things, but the reaction is something that you can trade, and that is something that we're seeing here and that we're showing in these videos. So as we can see here, even though we did break below this exponential moving average cluster during this descent lower, prices were held by the 786 retracement, which came in at right around 769. So currently what we're seeing here is a share price movement that has already now, started to move higher. And we have seen prices rise all the way into the upper 27s. So the real question here is whether or not the stock is going to be able to continue to maintain this trajectory here. One possible issue with this stock it does come in right around this 28.16 level, because as we can see here, prices are starting to fail a bit in this area, or at least in anticipation of this area. We haven't really even tested the 28 level just yet in this most recent run higher. So as we can see here, we're still a bit below this resistance line, and we're starting to trend lower a little bit here. If we do see near-term support levels, roughly 25.92, if we see those start to break, I do think that we could get a bit more of a retracement here, unless we see share prices bounce off of this 20-period exponential moving average on the 4-hour price chart. If that does not happen, I do think that we're going to be moving into this exponential moving average cluster, and events like that can start to create choppy trading conditions, because prices tend to sort of ping pong back and forth, bounce around between these exponential moving averages as both support and resistance. Essentially, what I'm saying here is that once you move into the exponential moving average cluster, it becomes harder to develop a trend. So, if we do see prices bounce off of this area, this 20-hour exponential moving average, which would be the yellow line here, we could start to see prices move higher, but the real issue is going to be this 28.16 level. Are we able to actually break above this? Because I think that if we do, you can start to look at the psychological level right around $30. But after we move into there's not a lot of upside resistance here. And that's why I had this prior arrow here drawn, this large, obnoxious upward arrow. The reason that I have it as big as this is because there really isn't much resistance here after we sort of overcome, specifically I would want to focus on this 28.16 level rather than the psychological level of 30. But as we know, the psychological levels do have some importance, and especially when you're dealing with a meme stock type of situation, it wouldn't be totally surprising to start to see some resistance around that $30 level either. So as this currently stands, an upside break of 28.16 would be fairly significant, because as things currently stand, this is essentially creating a double top resistance zone here. We have a failure here and a bit of a failure here. So if we are able to break above this level, it would suggest that things are starting to change. The paradigm is shifting a bit here, and the stock would then be on a better track to start to recover some of those prior losses. As we pull out farther on this chart, we can see that there's a lot of upside potential here if we're looking at the broader stock history. So here's the current market analysis for Chewy Incorporated, stock ticker CHWY. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.